Good evening, friends. Today's topic is basics of holding company accounts. What do you mean by holding company? A company shall be deemed to be the holding company of another if but only if that other is its subsidiary. It means what? A holding company is one which controls one or more other companies by way of holding majority shares or controlling the composition of board of directors or controlling a holding company with its subsidiaries. What it means? It means a company which acquires the majority shares of another company is called as holding company. Tata Company has acquired the Jaguar Company of UK with more than 50% of shares. In such a case, Tata is a holding company, Jaguar is a subsidiary company. Facebook has acquired the majority of shares of WhatsApp. Here, Facebook is a holding company, WhatsApp is a subsidiary company. Got it? So, what do you mean by subsidiary company? A company whose majority of shares are held by another company is called as subsidiary company. I hope I am clear right now. Okay. With regard to holding company accounts, we have to prepare a consolidated financial statement. It is not compulsory, but it may be prepared as per accounting standard 21. Here, what we have to do, we have to club all the expenses, income, assets, and liabilities of both the holding company and the subsidiary company. That grouping is called as group account, and we shall present the grouped account in the form of consolidated balance sheet. As per AS 21, the holding company is called as parent company. Okay, what are the process involved in preparation of consolidated balance sheet? Let me show it here. It involves technically six steps. Step number one, we have to calculate the holding minority ratios. In such a case, what do you mean by the minority? The balance shares of a subsidiary company holded by others other than the holding company is called as minority. Say for example, Y company has 1 lakh shares, out of which 80,000 shares are acquired by ABC company. So ABC company is a holding company, X is a subsidiary company. ABC hold 80% shares. The remaining 20% is called as minority. Okay. So we have to calculate the holding minority ratios. In this case, 80 is to 20. That means 4 is to 1 is the holding minority ratio. After preparation of holding minority ratio, we have to identify the revenue profit and capital profit of subsidiary company. What do you mean by revenue profit and capital profit? Any profit earned by the subsidiary company after its majority of shares are acquired by the holding company is called as revenue profit. Let me give one example. ABC company acquired 80% of shares of X company on 1/1/2025. So, any profit earned by that X company after 1/1/2025 is called as revenue profit. The revenue profit of subsidiary company that has to be divided or allocated between the holding and minority ratios. That has to be shared between the holding company and to the minority in the ratio of holding minority ratio. Here we have given in that example the holding minority ratio is 80 is to 20. Okay, so this is the process of revenue profit. What do you mean by capital profit? Any profit earned by the subsidiary company before the date of its acquisition by the holding company. Again, one example, no, ABC company acquired the shares on 1/1/2025 in X company. In this case, Any profit earned by X company before the date of 1/1/2025 is a capital profit. Is it okay? Is a capital profit. That amount of capital profit should be allocated or apportioned between holding company and minority as per the holding minority ratio. How we could calculate the capital profit of subsidiary company? It's very simple. We have to take the reserve amount of subsidiary company and with the profit of subsidiary company for the entire year. From that profit, we have to deduct the revenue profit and we could deduct the preliminary expenses. The balance amount is called as capital profit. That amount of capital profit should be divided between holding and minority as per the ratio. You got it? Yes. Thank you. Step number 4 is calculation of minority interest. We have given that example, no? ABC company acquired 80% of shares of X company. Remaining 20% is minority interest. Here, how we have minority's portion, minority shares. How we could calculate the minority interest? First of all, we have to take the total share capital held by the minority. That means 20% has to be taken. From that, we have to add the minority's share of revenue profit as well as the minority share of capital profit. The balance amount is minority interest. Where it is to be posted? The minority interest should be posted in the consolidated balance sheet in the liability side as a last item. Why it has been shown as a liability side? It is a liability of holding company towards the minority. Got it? Thank you. Then, step number 5 is we have to identify the cost of control. That means goodwill or capital reserve. Cost of control is an excess amount paid by holding company to acquire the majority shares of subsidiary company. Okay, I have given one example now. ABC company acquired 80% of shares of X company. Have you remembered this example? Okay, here. Suppose assume that the total value of share capital of X company is rupees 5 lakh alone. Suppose that ABC company, while acquiring the shares, if they have paid more than 4 lakh, more than 5 lakh, the excess amount is a goodwill. Let me give you a simplest example. If the share value of subsidiary company, that is X company, is rupees 10, what the amount to be paid by holding companies? Just rupees 10 only. Suppose holding company paid instead of 10, if they have paid more than if they have paid 15 rupees, the excess amount of 5 rupee is a minority interest. Sorry, is a goodwill because they have paid an excess amount due to the goodwill or value of subsidiary company. How we have to calculate the goodwill? It's the simplest process. Here we have to take the actual amount paid by holding company for the shares of subsidiary company. Say for example 7 lakh minus face value of those shares acquired by the holding company. Suppose 5 lakh. 7 lakh from 7 lakh to be deducted from 5 lakh. What is the extra amount? Rupees 2 lakh. From that amount, we have to deduct the holding company's share of capital profit. The balance amount is goodwill if it is a positive answer. If it's a negative answer, it's a capital reserve. Here, one treatment is that if the answer is minus, it has to be treated as capital reserve, and it must be capital reserve must be posted in the liability side of consolidated balance sheet. Whereas if it is a goodwill, it has to be posted on the asset side of consolidated balance sheet. Is it okay? Am I clear? Okay, let me show a simplest format of consolidated balance sheet. Okay, yes. Yes, this is the simplest format of consolidated balance sheet. Before that, let me give one tip. What we are doing here is we are merging, clubbing, or grouping, or adding all the assets and liabilities of holding company and subsidiary company, that is ABC companies as well as X company. We have to add all the items of assets and liabilities of both the two companies because it is holded. Okay, okay. That's the simplest step. So we shall begin the liability side of consolidated balance sheet. The first item is share capital. Here, what we have to do, we can take only the holding company share capital. We can't take the subsidiary company share capital because the subsidiary company share capital is taken by the holding, 80% is taken by holding, and the 20% lays with minority. So there is no further share capital of subsidiary company. So we have to take only the share capital of holding company. That's point number one. And point number two, reserve. What we have to do, we have to add the reserves of holding company and a subsidiary company. And from that, we have to furthermore add any amount that has been arrived in step number 5 as a capital reserve. That has to be added and shown at the outer side. Then the third item is a surplus. Here, what we have to do, we have to take the profit of holding company. From that, we should add the revenue profit of subsidiary company. That is, holding company's share of revenue profit. We have calculated the revenue profit in step number 2. After calculating the revenue profit, what we did, we shared to the holding company and to the minority interest. That shared portion of revenue profit of holding company to be added here. Let me repeat it. We have to take the profit of holding company and the holding company's portion of revenue profit. Both items to be added and to be shown at the outer side. This is third entry in liability side. The fourth entry is secured loan and unsecured loans like debenture, bond, loans, etc. Here, that's the simplest thing. We have to add all the loans of holding company and subsidiary company just to show it at the outer side. That's over. The last item is current liabilities and provisions. What are the items of current liabilities? Like sundry creditors, bills payable, bank overdraft, and provisions. All those things are comes under the part of current liabilities. Just add the holding company's current liability and subsidiary company current liability. From that, if there is any intercompany liabilities, that has to be deducted. The remaining balance should be shown at the outer side. The last part of liability side is minority interest, where we have calculated in note number 4. The total is called as total equity and liability. Now we could move to asset side of consolidated balance sheet. It involves first item is fixed asset, second is investment, third is current assets. That's it. In fixed asset, that has been divided into two parts: intangible fixed asset and tangible fixed asset. In intangible fixed asset, what we are doing, we have to take the goodwill of holding company and goodwill of subsidiary company. From that, we have to add any goodwill that has been arrived in note number 5. In note number 5, that has been shown, posted at the outer side. This is point number 1. Other than goodwill, that means tangible fixed assets of holding company and subsidiary company to be added, just showed at the outer side. Then next item of asset side is investments. We have to take all the investments of holding company and the subsidiary company to be merged and clubbed and added and shown at the outer side. The last items of asset side is current assets. We could say that what are the current assets here? We could post it here. Sundry debtors, bills receivable like stock, cash in hand, cash at bank, prepaid expenses. All those are called as current assets. All the items of current assets of holding company and a subsidiary company to be added, and from that we have to deduct if there is any intercompany debts. The intercompany debts to be deducted and the remaining amount to be shown at the outer side. Now we have to add the entire items of asset side. At the end, we could see that the liability side and asset side of consolidated balance sheet is one and same and equal. This is called as consolidated balance sheet. This is a nutshell of holding company accounts. Shall we recollect few things? Holding company, it means company which controls majority shares of another company. Subsidiary company is a company whose majority shares are held by any other company. Then revenue profit and capital profit. Profit after the date of purchase is a revenue profit. Any profit before the date of purchase is a capital profit. Then minority interest, it means the shares held by public other than the holding company is called as minority interest. At the end, last point is goodwill. It means any excess amount paid by holding company to purchase the shares of subsidiary company is called as goodwill. What we are doing in consolidated balance sheet, we are clubbing both assets and liabilities of holding company and subsidiary company and creating group accounts and posting here. That's it. I hope I'm clear with the basics of holding company accounts. In the next session, we could see the holding company accounts, consolidated balance sheet with a problem and a solution. Thank you. Have a nice day. God bless you all.